when you make investments into equity, you have various choices, right? You can choose to invest in the frontline companies. It's a different style of investing. And I'm talking about building an individual stock portfolio. And similarly, if you're investing in mutual funds as well, or you can choose to invest in smaller companies that have higher potential for growth and that may not be valued as expensively as your frontline companies. The question that I'm asking is that in all probability, the smaller companies have higher risk of drawdown, but higher potential for growth. I'm talking about balancing of risk and return. Sometimes it's not worth it. I see so many people investing in companies that are penny stocks, that don't have functional businesses, but that are trading significantly higher than they were even a couple of years back. And that tells me that people want to make a quick buck. The question that I'm asking is, do you protect your downside or do you go for broke and say 20,000 shares? And I got a question just today on that. 20,000 shares in a company at 47 rupees, which is now 40 rupees. And the gentleman has lost so much money just because they're going for broke in a stock that promised them outsized returns.
So one of the worst thing is that in investment is that how much other people are making. So that is what catches people. And people are not very comfortable growing wealth slowly. So that is a problem. So if you look at what kind of return equity market has delivered 15% compounded. In today's market, if you say 15% return, वो तो मैं एक दिन में बना लेता हूँ. That kind of thing. So when you look at investing in equity, you just need to keep it in mind that what has been the long-term track record. Long-term track record has been 12 to 15%. That is the kind of return you're going to make. If you make excess return, then in future you expect volatility. Either the return will come upfront or volatility will come upfront. So that choice you need to make. So in this market, in the current market, in my opinion, micro cap, small cap, mid cap are in little challenging territory. So advice to investor to avoid taking fresh allocation and do more allocation into large cap or flexi cap and multi cap kind of structure.